What's up, guys? This is Carter Thomas with Coin Mastery TV, and make sure you hit that thumbs up button today. Let's get that thing going. Just smash that thing. Today, we're talking a little bit about what's going on in the good old crypto markets. We're doing daily updates for anybody who's brand new. Thanks for joining us. We're talking a little bit about the inevitable, or maybe not so inevitable, I guess, the dominance situation of what's going on with altcoins and Bitcoin. Talk a little bit about what's happening with regulation and the government and all that sort of stuff. And then I want to spend the last part of this, as we often do on Fridays, discussing a little bit about the psychology behind crypto, about what's going on, especially in times like this, high volatility environments. FOMO is running crazy, and people are starting to make some money, right? And I think that for anybody who's getting into crypto, who's been in crypto for the last 12 months, there has been a moment where you have made some amount of money, and often you wake up and there's more money than you ever dreamed of. And just wanted to have that conversation, and we'll get into that in a little bit. But first, I want to kick it off with our good friend Bitcoin, just really just messing with us, just nonstop. And it's always hard to tell what's really going on behind the scenes of Bitcoin, especially anytime that there's the biggest mover in the market. What exactly it is it South Korea? Is it the futures market? Is there someone domestic in the United States? What's happening with Bitcoin? And that is why we really try to follow these lines. I'm not doing trend lines the way I was earlier this week as we broke through that trend line on this side. We are doing some retracement lines. And more importantly, we're just seeing how many times this accordion is going to coil up before it makes its next big move. So what I'm focusing on personally, with my loose attempt at technical analysis with a Fibonacci, I guess I should go up a tiny bit more. As you can see on the daily charts, it bounced off the 50.5 fib right here yesterday, and today we are slowly unfolding a candle, but we're staying above that 50, which is nice. So keeping an eye on that, even when you go into the 4 hour, it's the same story. So as long as it stays above, I guess, let's say, call it 12,840 US dollars on Coinbase. This is obviously going to change on different exchanges, Bitstamp, Bitfinex, Gemini, all the other big ones. We're just in a sideways pattern, potentially in an accumulation pattern, potentially just in a price discovery area for the futures markets as new money comes in. And I think that it's just a wait and see. And I wish that there was more news to give you guys on Bitcoin. But until we see a big move, it really is speculation. Now, yesterday or earlier this week, we've been talking about Ethereum. I thought today would be helpful to talk about Coinbase. You guys know I'm really, for the last 3 weeks, I've been very bullish on Coinbase. I continue to be bullish on Coinbase. I'm sorry, not Coinbase. You're right. Litecoin, which is on Coinbase. And I drew one fib from this big low up through the Fibonacci. You could potentially make a case to draw one from the 97 level, really depending on what sort of time frame you're looking at. But you can see that this fib is not that clean. And I think that the reason why it's important to point this out is because often you might draw a chart hoping that it's going to show you what you want it to show you, right? You might draw something like this, and you maneuver it to get it so that the levels hit perfectly. But when you draw the chart as the candles or whatever else show you, you may not get the clean levels that you're looking for. Now, it doesn't mean that it's not worth it by any means. It just means that you got to follow the charts more than you follow, or you got to follow like what the price action is doing more than you follow what the technicals are telling you. And it's just it's a data point just as much as a news article can be a data point. So I think that that's really important. And this is something that I've learned a lot of, is that you don't want to mess. You do what the chart tells you to do, and you go from there. Now, there's different ways to adjust this, right? Whether you're on the daily, where you can move it to just be in the candles and not be on the wicks, and then things start to change. If you do it on the wicks, it really depends on the time frame. But you can see that that's just an important piece, especially for anybody getting in technicals. This is something that I've struggled with. Because you want it to like fit nicely into that box, and often it doesn't. So Either way, we're floating right around the same line, right? This is not that different than Bitcoin right now, other than this huge run up. And I personally, I'm really excited about Bitcoin. On Litecoin. The volume is kind of slowly increasing. It's not getting a lot of the same price action as Bitcoin. There's no Litecoin futures market yet. And I think that there's just a lot of upward potential in Litecoin. So of all the top coins right now, other than I would say Stellar Lumens, Litecoin is the one that I'm excited about. I'm accumulating it. And one of the biggest reasons why is because almost everybody in crypto thinks these are too boring right now. And that is when I want to be buying the most. Because if you're buying the thing that everyone thinks is the hottest new coin, you may get a little bit of it, but I like it when I'm the lone wolf in a buying situation. So that's the other big reason why I'm stoked on this stuff, because it's expensive, it's not moving very much, it's boring, all that. So keeping an eye on that, that's really what my big accumulation play is. But at the end of the day, I'm just kind of sitting back and letting the markets do its thing for now. Now let's look at, I saw somebody post this on Twitter. I think it was Crypto Yoda, just so that I give full props. If you guys don't know him, it's Crypto Yoda. I'm assuming it's a guy. He always has very good insights and posts new stuff. What I thought was really interesting is that when you look at we often look at the actual coin charts with technical analysis, and there's no way to do this in real time right now, but you can also look at any chart, any market with similar, albeit simple, technical charts. And the one that I would encourage you to look at is the simple one, the lines, right? The previous resistance is new support. When you look at total market capitalization, previous resistance was 645 in early December. And now it's dropping down to, I guess, yesterday or today, I guess you should say, it get down right around that area. So if you drew a straight line right there, it would be pretty close. And in the very short term here, you can see that it's kind of bouncing off of it. Meaning, if this technical held true for this chart, as it should in any technical analysis, based on a lot of different forces, this is a good sign. This means that the market cap may be bouncing off of this. And it's also holding true for altcoins. Now, the difference being that this is much more clearly a parabolic slope. This is not a like a retracement slope. So a retracement would be flat. This is more of a diagonal that would equal those two, which means that it's going up, but it's still a trend line in that sense. Meaning, if this holds true, we very well may have another big surge in market cap, which could be Bitcoin bull run, altcoin bull run, all at the same time. And that's when things get really crazy, which is kind of what happened in May and June. Everything did really well, and then Bitcoin kept going and everything fell off. So I thought that was just a really interesting chart to look at, really interesting graph. We've been looking at the dominance, and I think that this will continue to unfold as we see the market cap increase, as we see the futures markets come out, as just everything gets more and more complex. So exciting times, as always. Looking through, Binance, KuCoin, all those different exchanges, Bittrex, obviously one of the biggest. It's one of these things where if you drill into some of these coins, you can find out some really good, what the particular situation, what the news was, the thing that drove the growth. But I'm more interested in the macro implications of what this all means. I am not very good at doing shot calling on coins unless I've done a lot of research, and I've just haven't done enough research on the thousands of coins that are available. I do think some of these exchange coins, one of the things we talked about yesterday was these guys signed up 240,000 per hour. I got to change the title. I'd put per day. And they're making money, right? So every time you do a fee, so the BNB coin and then on KuCoin, KCS coin, that's a real business model, and it's a very lucrative business model. So you're investing, quote, investing into a company that's actually making money. This is not pre-revenue. This is real digital currency that can be converted into Bitcoin or fiat or whatever it may be. And so I think that is going to be an ongoing trend of 2018. Definitely in 2019. 2018, we still might be able to get around that, I think. But this idea of in your portfolio, a question you can ask, how many of these coins are businesses? How many of them are actually making money today, are generating revenue? And I think that is more of a value investor standpoint. I don't think it's necessarily a growth standpoint, meaning just because they generate revenue now does not mean they're going to go the biggest. It just means that they may have the best staying power because they can hire employees and people will continue to use the products. It's a valuable, all the things. So keep that in mind. I think that'd be very valuable. The difference with BNB and KCS, BNB is obviously much bigger, a little older. KCS, younger, smaller, but it pays out dividends. So go check it out. That's only on KuCoin. You can account links below. Now, this I just saw this morning. I got to look into this a little bit more. Where we met, as we saw with South Korea, we saw China, we saw South Korea, and now we're seeing the United States. Those are the big three in terms of volume in crypto. It's China, South Korea, United States, and Japan's up there for sure. And they've had their own regulatory, but they often work in their own sort of echo chamber in regulatory ways. But I would say that whole ecosystem, the United States is really the one that has not come out and made any sort of serious decisions about the exchanges, about crypto in general. I mean, they've loosely talked about taxes, but that's something that not only do we want more, not regulation, we want more guidelines so that we can act accordingly, we can bring in new money, but we also want to make sure that those guidelines we have a say in that. Like the last thing we want to do is have them just decide what's good and what's not good and tell us. That doesn't really help. So it's good to stay in the know of this, keep the conversations going, and even to reach out to people. Maybe it's your congressperson, your senator, start to get people together. I know I'm talking with a lot of really good, really smart people about how we can make a difference and reach out to senators and talk to them about providing good information about almost like a lobbying group, just to get clear guidelines around crypto and taxation and regulations. And this just came out this morning where the Secretary of the Treasury, Steve Mnuchin, I can't pronounce that, that the Financial Stability Oversight Council, they've created a working group on cryptocurrencies. Now, what's interesting is that he said, quote, "We want to make sure that bad people cannot use these currencies to do bad things." You may have seen the article that came up a couple weeks ago where the press secretary, Sarah Huckabee, was asked about crypto or Bitcoin. And she said that they brought it up, but it was brought up under the Department of Homeland Security. It's not brought up under the IRS or the SEC or FTC or anything like that. Meaning that crypto is in many ways being looked at not necessarily as a financial instrument, but as an anti-terrorism defense thing, national security situation. And that is a conversation that I think that is important to make sure that we all are aware of so that we can help educate and inform and make sure that people know that cryptocurrency is not for malicious purpose. It's just it is what it is. But this is going to be very interesting, and I would encourage everybody to stay up to date on this sort of stuff because it's going to impact you whether you like it or not. It doesn't matter if you agree or disagree with any sort of the political stance or whatever. It's more about regulation is being formed, and the regulators, they will listen to the public. They always do, and the more we can be involved in this conversation, the better. So I'm going to keep my my ears open about this. I want to keep connecting, helping, or building communities and spreading the word and trying to make sure that we get really good informed regulation and not regulation that misses a big part of what this is all about and sets us back years in terms of progress. So just a good thing to keep in mind as we dive in. 2018 is just going to continue to be a huge market. So nip this in the bud as much as we can. Now, lastly, there was an article called The Highs and Lows of Cryptocurrency Investing. And I'm sure if you're watching this or listening to this, I'm sure you've never had any bad days crypto investing, right? You've never FOMO bought. You've never had any sort of regret. I say this facetiously for anybody who can't see my face right now. But I think what the point is that what happens in these markets, and I've seen this happen, not obviously nothing like crypto, but in emerging markets, when there's money on the table, when it feels like the opportunity is time sensitive and that there's time running out, it tends to accelerate not only bad decisions, but the feelings of highs and lows, right? The FOMO gets worse and worse, and it'll continue to get worse and worse for a while. As this, just like the stakes feel like they're getting higher and higher, and maybe it gets harder, harder is in quotes here, to hit a huge ROI on a coin. And I think one of the big things to keep in mind, right, as we look back on this and as we look back on the global charts and altcoins and everything, and one of this overarching themes is that you can protect yourself from a psychological standpoint of the absolute deluge of dopamine that's being just showered into the crypto markets. And the way you do that is you have a balanced portfolio, right? On some level, you have cash available so that if everything goes up and down, whatever, you have something that's stable. And then the third thing is you can educate yourself. You can keep a journal. You can stay smart. You can talk to people about it. You can move a little slower into the market so that you are more deliberate and conscious of the decisions you're making. Because bad decisions are going to hurt you a lot more than good decisions are going to help you. And this market, I mean, when this Binance and KuCoin world, when this dominates our life, when Blockfolio is what we're refreshing, when we're waking up in the middle of the night so we can check our portfolios, I know people do that. I mean, everybody has done that or continues to do that. As that happens, the more that happens, the more likely one bad decision may slip through the cracks and set back all your progress a lot. And I think that that's the big piece I want to take away from this. This article is more about, the infrastructure and the overall opportunity of crypto. Can it really survive and break through and have become a $10 trillion opportunity? That's going to happen. Okay. It's going to go big. It's more a matter of when and how does it happen. But I think for you guys listening and watching, it's all about you and your micro decisions, right? This is your life. This is your future. This is your thing. And you got to treat it very, very seriously and realize that this whole game is not designed to help you. It is designed to take money from you. Okay? It feels like crypto is built to feed you huge returns, but realize that markets are designed to take money away from you. You have to realize that now, because in the next 12 months, it's going to be doing that to a lot more people. And you just got to get these habits in now. Got to get the psychology dialed in. Trade less. Get some sleep. Don't chase the random stuff. Do your diligence. Do all the things. And the thing I need to tell you, obviously none of this is financial advice, but over the long term, which is really all that matters, you're gonna make bigger gains by having smarter, more consistent decisions. Even if you have a huge win now, it'll prevent you from having a big loss later, so that you even out. Like you want to have it compound. All right. If you're here for 3 months to get in, get out, this probably isn't for you. If you're here to build a real new world, like a new future for yourself, as I think a lot of you are, that's what I'm here for. Play the long game. And that brings me to the last thing, this tweet, I guess I should say tweet thread, where I've been getting a lot of emails recently of people that are making a lot of money, like a lot of money. And first of all, I want to say congratulations. And second of all, and I think more importantly, for people who aren't making a lot of money, it's not, you have not missed your chance. Okay. Like there's an infinite amount of opportunity left in the next 5 years for everybody to get a piece. It's just going to be about who's making the right decision. So I think that that's really important. And I put this up because the tweet said, people are making money. Here's some thoughts on the psychology of wealth. I put this up because let's say you bought like $1,000 worth of Ripple when it was 1 cent. And now Ripple's at, I don't know, $2 or whatever it may be. And you wake up and you look at your Blockfolio, or you look at your coin tracking, or you look at wherever it is that you keep your portfolio, and you say, wow, this is worth, I don't know what the math is on that. Let's say it's worth $10 million or $5 million, whatever. And you say, God, I have $5 million. I'm rich. I've finally done it. That is awesome, but that is a very dangerous thing to think, because until you can take that Ripple, and Ripple is like one of many examples. It could be anything. It could be like, I don't know, Civic, right? I mean, you could pick any coin in the market cap. But until you can take that coin and you can go and exchange it for goods and services or whatever it may be, it's not necessarily going to make you rich. It's just worth something right now. You still need to convert it to US dollars in this case, or into Bitcoin, or maybe into something like Litecoin. Someone might accept Litecoin as payment or whatever. But if somebody else will not accept that coin as a form of exchange, as a payment, or as a way to exchange value, you're kind of rolling the dice in crypto, because at some point, if that Ripple or if that Civic or whatever it may be, if it stays as a very valuable asset and it continues to be one of the assets that people continue to value and continue to say is the worthwhile one, then you can trade that asset to other people who have that asset. You will become very, very wealthy over the long term. But if you own something that you have to convert into another coin that is the thing that everybody agrees is the transaction or the valuable one, you're inevitably going to be losing money over the long term. Like the price is going to depreciate of the coin that you have. And I know that this is kind of a meta concept. This is more of like an economic concept with money supply and all that sort of thing. But it really comes down to this. In the next couple of years, only a handful of these cryptos are really going to go big, are really going to be worth anything, because networks require like everybody adopting them for them to work. The same way there's only a couple social networks, there's only going to be a couple cryptos, because they all, like everybody has to use them. That's why the network effect. And if you own one of the network coins, whether it be Bitcoin or Litecoin or Ethereum or whatever, you have a network that will all value that same coin. If you own a tertiary coin, or secondary coin, I should say, for you to redeem the value, you need to put it into the network that everybody like values, and then you can get your value out of it. And so when you know that is what's going to happen in the next few years, it is very important for you. Some people call it taking profits, some people call it scalping, whatever. If you make a lot of money on an altcoin, you need to put it into some of the coins that you believe are going to have the biggest networks in 5 years. Whatever you think it is. I mean, you may think that Cardano is going to have the biggest network. You may think that Ripple is going to have the biggest network. You may think that Bitcoin or Litecoin or Ethereum or Monero, whatever it is. But that's the one, like those are the ones that you want to be stockpiling. And it's very counterintuitive to think that way right now because everybody's making tons and tons of money, making massive on paper dollar amounts from altcoins, but they're not stacking their main coins that they're making their big bets on. And what's going to happen is at some point, they're just going to realize like, oh, maybe I should start to move some money over to this one, but I'm going to hold on to this one. They get emotionally attached to it. And they slowly start to, lose their riches off of these altcoins, and they don't have the stack of the coins that actually do end up becoming the big winners. So I'm not saying one coin. I don't know which coin it's going to be. I don't even know if it's going to be Bitcoin. That's probably the best guess because for obvious reasons, because it's the biggest, but we're not really sure. I think that owning many of the top market cap coins is probably your best bet for now. But I think that is the psychology of wealth, right? It's spreading out your riches into assets that will have long-term staying power. If you make $20 million in a business, you don't necessarily want to invest all $20 million into that business. You want to take $5 million into the business and you put $5 million over into a car dealership, and then you put $5 million into this, you put that's how you become wealthy. And that is a very important psychological hurdle to get over. And I think that if you are listening to this, or if you're watching this and you have not made what you consider to be a huge amount of money, if you've only gone from like $500 to $5,000, which is incredible in its own right, this concept will still apply to you, because the pain of losing money doesn't matter if you've got 5,000 or 500 million. It's still gonna feel like you have lost a lot, especially if your earning power if it's a big part of your earning power. So this is something that I'm really thinking about, because this is going to affect a lot of people in the next 2 years, next year even. And the last thing you want to own is an altcoin that just, it's not going to be the thing. It's not going to be an event. It's not going to be wake up one day and there's a crash from Ripple or whatever, and it just prices dumps like in one day. What's going to happen is it's going to slowly go down. I shouldn't use Ripple. Let's say Cardano, right? Or Neo. I mean, any coin. I'm not trying to pick on any coin here. But it slowly goes down. And every day we're like, all right, well, it's down 3%, down 5%. It's not a big deal because this thing is going to crush it. Like, I know it's going to go. And it just ends up just slowly going. And you're like, well, it's going to come back. It's got all this tech, whatever. And you don't lose all your money. You just you lose a lot of the benefits and a lot of the gains from it, because you didn't diversify. You didn't lock in the profits, or you didn't diversify the risk. And that's what I hope that doesn't happen to a lot of people. That's why I'm a big fan of diversification. That's why I'm a fan of taking your profits when you get them. And that's why I'm a fan of playing the long game, because that's how you make the real cash. Again, not financial advice, just saying. So with that, we'll wrap it up, TGIF guys. I hope you have a wonderful, profitable, and fruitful weekend. I will catch you guys next week. Peace out.